So hello guys and welcome to this video, and today's video is my top 5 stocks and shares currently running at the moment. And I just want to quickly thank you guys for reaching 600 views on my video on how to start investing. Honestly appreciate it. The support has been amazing. I'm getting loads of support, getting people recommending videos. So today's recommendation is what is my stocks and shares, my top 5 stocks and shares which I'm thinking about doing recently. So let's get straight into it. If you have not yet subscribed, make sure to hit that subscribe button, leave a like, and also if you have still not signed up to Trading 212, use my referral link in the description and you'll get your free share once you deposited £1. Let's go. So guys, the first share that I'm thinking about is a risky one. It's a bit of a risky one, but I'm thinking about it. I'm thinking, like I say, no risk, no Rari. First one is Aston Martin, and Aston Martin is a very, very popular car brand. Everyone knows what Aston Martin is. Everyone knows Aston Martin's expensive car brand, which not many people can afford, but they're beautiful. And they are famous for their James Bond, which does link into one of my other shares that I'm thinking about going for. You guys already know what I'm on about if you have been watching my past videos. Aston Martin is currently running at 59p right now, which is a complete bargain. However, it's at risk because they've got so much debt. I think it's almost £1 billion worth of debt. I might be wrong, about 600 million, even though a billionaire has bailed them out. Yeah, the billionaire has invested, I think, up to $165 million to be exact. I think a guy called Lawrence Stroll, a Canadian billionaire, he's put lots of shares. Obviously, he's thinking there's something going on with Aston Martin, that they will not go bankrupt, even though they have been bankrupt 7 times in their previous history. The highest they've ever peaked in a share is £15 per share. That is already, I can't even work out the maths. If you think about it, they're 59p per share now. Imagine them at £15 per share now. That would be underinvestment. They do not pay dividends right now, so if you're a dividend investor, you want to stay away from that. But if you're looking for a long-term or short-term profit, you can use Aston Martin as a risk to even 10 times or even 20 times your money. So yeah, Aston Martin is a good one. They've got a new SUV coming out very soon. They're relaunching their whole brand, Aston Martin, and that SUV is hoping to up the shares by next, I think it's Christmas, maybe even after Christmas. So if you want to get in on Aston Martin is a very good one to go for. But like I say, it's very risky, so do it at your own risk and do not blame me. But yeah, I'm going to go Aston Martin. I've put already, I think, 50 shares of Aston Martin already in, but I might go more. So at number 2 is one that's very close to my heart, and as you guys know, if you've been watching my YouTube channel for a while now, Cineworld. I had to mention Cineworld. Cineworld, I'm always mentioning Cineworld. Cineworld is one that I like, but it's risky as well because they are in debt by so much money. I don't know the current figure, but there is so much debt. They've just bought a franchise in Canada, which I do not know if they can afford, so I think they might have to go backwards on that. However, yeah, Cineworld are currently running at 53p per share. Remember guys, I got my shares 50p on average. They spiked up to 76p. I sold all my shares and they've gone back down to 53, so I bought 100 shares of Cineworld. They're a very risky one because I didn't know what's going on with them. I do not think that Cineworld will be open in the next 2-3 months just because it's all coronavirus, this whole pandemic. I do not think it's looking very good for Cineworld, but I feel like there's going to be a constant drop. I do not think they're going to go 53p still. I think they're going to go down to 40, maybe even 30p in the next couple of weeks. So I would not hop on them yet, but keep an eye on them. It'd be a very good idea maybe to hop on them. The highest they've ever spiked is £7.18 a share. This was back in 2017, which not too long ago. Bear in mind, Cineworld have pushed back their release for the new James Bond film. I think it's the last Daniel Craig film, so don't forget, quite a lot of people will want to see that. So there is hope for Cineworld. There's a lot of hope for Cineworld. They do pay dividends as well. At the moment, they don't pay dividends, but their current dividend yield was 38%, which I was thinking, whoa, that's almost half of a share. So I did hop on that, but obviously I'm thinking they're not going to pay dividends because of the current crisis going on. So I'm leaving it as that. I was using it as just an investment, hoping to them build up, but obviously I'm not buying them yet. I'm just keeping my eyes on them. So yeah, that is another stock that you should keep your eyes on. I think it's a very promising one, and it could work out in both ways. But like I say, it's as risky, and it's risky like Aston Martin. So my other share, which I have been looking at, and it has been leading me in a little bit. I'm thinking about very soon investing, and it is Shell, Royal Dutch Shell. They are a great company. They've been around for a long time. They're currently running at £13.56. They pay 11% dividend yield, and they're one of the most stable, I'd say, in England most stable petrol companies going. I feel like they're stronger than BP, and I think they'll be longer. I think they'll be going for quite a while. Their dividend yield is 11.8%, which is amazing. I can't believe how high it is. So you think about it, if you're putting £13 on, you're going to get £1.30 every year. The highest they've ever been for a share was £28.41, and that was back in May 2018. If you think, if BP do go bust, or any other companies, Shell will just keep going up because there's no more competition. So I'm thinking 100% Shell will. They have gone up by 0.25% in the last 7 days during this oil crisis. That's not bad. If they're still doing well during this oil crisis, then it's not looking too bad. I think Royal Dutch Shell is a very good company to go for because I think they're quite safe. I don't think they're going to go anywhere. I think they're safer than Cineworld and Aston Martin. So Shell could be a good one. Just keep looking at that. I'm going to get on Shell very soon just because I feel like they are going up and up and up. This whole oil crisis is gone now. It's not too bad. It peaked, the whole oil crisis, last week, and I feel like it's just going to start slowly going back up once more people are driving, and obviously the supply and demand is going up. So Shell is another company which I think is a nice one to go for. At number 4 we have Rolls-Royce. Rolls-Royce are a decent company. I've put a few shares. I think I put about £50 worth of Rolls-Royce shares. I bought them at £3.5 and now they're currently going for £3.10. Not too bad. It's quite a pricey one, but obviously Rolls-Royce is a pricey car. What can you expect? Rolls-Royce is, you know, it's a luxury car which people with money obviously go for, so I don't think they're ever going to go bust. They're a British company as well. The government backs them up. I think they make airplane jets or turbines, one of them, so they will be backed up if they were going to go down by the government, and I do not think they're going to go anywhere. I think they're going to carry on going. Yeah, so they have just been making ventilators as well to help battle the coronavirus, so that's obviously another benefit to what the government will think, actually, hang on, let's help them out. So I think Rolls-Royce is a decent one. The most they've ever been at a share was back in 2013, so quite a long time ago, and it was £12.40. So you think about that, is 4 times the amount of what it is today, which you think Rolls-Royce, they will slowly start going back up and up and up, and even if they go up by £1, you've made a third back already. So Rolls-Royce isn't a bad investment to go for. And last but not least is my favourite, one that's close to my heart, one of my first ever investments, and that is William Hill. Yeah, so William Hill is quite a comfortable betting company, which you do see quite a lot on the high streets. And yeah, even sometimes I do place a cheeky bet on William Hill, you know, gotta be honest. They are currently going for 93p, and they did peak down all the way to, I think, 30 something p. I hopped on them at 40p. I sold all my shares at £1.7, so I was quite happy about that. Made quite a lot of profit, but they're currently going for 93p. And I was thinking, betting sites, they won't go. It's a bit like alcohol. It's a bit like all the addiction places, all the addictions, they will never go. So William Hill is quite a good company. William Hill have also just bought into the American markets. That means a lot more people, millions more people are going to start using William Hill. Obviously, once all the soccer, why do I say soccer? William Hill's prices will go up once football and all the other sports will start playing. Obviously, the American market will start boosting more money, more money. Yeah, so the most they've ever peaked at is £4.25, which wasn't that much of an increase. It's obviously a 4 times increase from now, but that was back in May 2015. They're not a bad site to go for. I would go for them myself. I'm going to put a few shares back in soon. I think they're going to keep going down because obviously there's not much football or any sports going on right now. So I'm just watching it. I'm just watching, see how it goes, and once I see a pattern, then I might start investing. They also pay a dividends of 11%, which is not bad. It's very much like Royal Dutch Shell. And yeah, you think about it, if you put in £1 on, you get 10p every year, so that's not too bad. You get a tenth back. It depends if you're going to invest dividends wise or long term or short term, just for a bit of profit. But these are my top 5 long term and short term profit gainers that I think will possibly benefit all of us. Yes guys, I hope you enjoyed this video. Sorry that it wasn't that descriptive, but I just gave you a brief overview of the 5 shares that are on my head right now. So yeah guys, hope you enjoyed it. Make sure to hit that like button, make sure to subscribe if you're new, and also if you guys have not signed up to Trading 212 yet, make sure to hit the link in the description. And yeah guys, if you haven't watched my previous video, make sure to head over to that and watch that on how to earn passive income for free. So yeah guys, hope you enjoyed this video. Make sure to hit the subscribe button, and yeah, see ya, bye.